Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, July 23rd, 2019. Again, we find ourselves in the final hour of the trading day, and as you know, I believe that the last hour of the trading day is the most important hour in that is when the large financial institutions and the market makers take over the market and move the prices in what my opinion are the correct prices, the most valid prices of the day, and therefore those are the prices that I, the majority of the time, will make my buying and selling decisions from. So, all right, let's just see if everybody can hear me and if we're all hooked up okay. I hope we are. Hope everybody's doing well out there and having a good day. Thank you so much for spending your time and coming by and taking a look at my trading. And I hope it's helping you, and I hope the advice and the lessons that I'm giving you is helping your trading. All right. All right, so listen, here's the format for today. First of all, we're going to go ahead, we're going to run the U.S. legal disclaimer, get that out of the way. Then we're going to come back, we're going to take a look at all my current positions. I'm going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward, either to the upside or to the downside. Then we're going to spend a few minutes on some trader psychology. I do like to do a little bit on trader psychology every day because really at the end of the day, I think it's the most important part of trading, the technicals and, you know, learning these levels and so forth. It's important, but really the challenge you're going to have in front of you if you want to make a career out of trading or a hobby out of trading is you're really going to have to get a hold of yourself emotionally and trade your plan. It's easy to say, it's difficult to do. You know, there's a few things that you can do to help. But you know, I would say the most important thing of all is your position size out of almost everything, because even if you're a horrible trader, if you have a small position size, it's not going to hurt you too much. If you're a beginning trader and you know you're prone to mistakes and you're really not quite sure what you're doing, then a small position size is going to nullify a lot of those issues. And you know, even if you're a very experienced trader, it's going to keep you out of you know, big losses, and it's going to keep you from being destabilized. Being destabilized is probably the most dangerous thing that can happen to you as trading. You can trade for months on months and trade really well, follow your plan, and then something happens and you just become destabilized, and then everything goes out the window. You position size too strong, you're not patient, you're revenge trading. So, you know, if somebody asked me what's the most important part of trading, if they asked me what are your top three things, I'd probably say position size, and position size. That's the root of it all. So, all right. So after we do the psychology section, we're going to come back. We're going to go through all my all the stocks on my watch list. We're going to go down through each one. We're going to analyze all the technical levels. We're going to look at RSI. We're going to look at MACD. We're going to look at support and resistance levels. We're going to look at moving averages. We're going to look at ATR channels. And we're going to analyze everything and try to calibrate everything and see if we have a position or two that might look good to go long at the end of the day. So we'll see. I don't know yet. Like I said, I like to base everything off the closing price. So no matter where it is right now does not mean it's going to be there at the close. So just kind of to be determined. So, and then after the market closes, if anyone has any questions for me whatsoever, please just let me know. Don't be shy. If you have any questions about what I discussed today, if you have any questions about another part of trading that I didn't even discuss, anything, ask any question that you have that I can be of help, and hopefully I can give you an answer that will at least be helpful to you. So, all right, and then that's it, right? Yep. And after that, then we'll be done. So, all right. First things first, let's run that U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey Andy, how you doing? Good to see you, buddy. Thanks for coming by today. I appreciate it. So, all right, well, listen, so the Dow Jones is having a really big day. It's up 189 points. It's up about 0.7%. The NASDAQ is up 36, up about 0.4, and the S&P is up 19, and it's up 0.65. So it's a big day today. When you go through the charts, it doesn't feel like it's that big of a day. There's some stocks like Coca-Cola, United Technologies that had big outsized gains today, and that helps the indexes. So, all right, well, let's get to it then. All right, so first of all, we'll go through my entries. So here is Etsy. So I did buy Etsy back on the 15th of July when we had the 1050 EMA cross. This is a good back-tested approach to trading Etsy. It's a mechanical approach. I don't usually use crossovers as mechanical approaches for stocks because if you have a mechanical trade, you're going to have to go through 4 earnings periods per year, and I don't want to do that. But I do use the crossovers as an entry. So I did I did enter here on the 15th of July. The next day, it immediately went back down, so I decided I didn't like the looks of it. But I have found that when the 10 crosses the 50 or a 5 crosses the 20, if you get an immediate reversal, if you then get a trigger after that, it's a pretty good time to buy. And so I did buy here, I did sell here for a loss, but then on the 18th of July, I did re-enter Etsy here because we had this V2. It's not the best of V2s, but because we just had the 1050 cross, I did like it. And so I did enter here because of the V2. Here's day 1, 2, 3. Day 2 did wash out day 1, not a lot, but it did. And then day 3 closed above the close of day 1. So I did enter it here. It also closed above 50, closed above the 10-day moving average, which is also positive. Next day went up, did hit 1 profit target. Yesterday, I believe we hit 3 profit targets on this one. I can't remember now, 2 or 3. So this has been a really nice big trade for us, obviously. Now, today we didn't hit any profit targets, but we did open up higher, and now we are lower. And what I don't like about this is, here's the previous range. We did test this range. We went above the range. And now, it's not closed yet, but currently where it is, not only is this a false breakout to the upside, we also went above the second ATR channel here and reversed back down. So those are concerning to me. Those are 2 red flags to me. On the bright side, we did test the halfway of this bar and it was able to recover. So, this is one of those kind of situations where you have conflicting signals. I mean, it gapped up and reversed, that's negative. It went higher than the previous high, reversed, that's negative. It went above the second ATR channel, closed back under. So what I'm going to do today, at the end of the day, if the price is under the 68.40 mark, I'm going to go ahead and I'm going to sell half of the position that I have left. We did scale out on the way up here, but this is just a way for me to stay in the trade because there's still some good things going for it. There's a lot of momentum, but I'm trying to balance that with the fact that we did have some red flags here today. So Whenever I get a red flag, it catches my eye. Usually I'll just take, like 12% off. I'll take like one profit target off, even if it doesn't hit my target. But because we have basically three negative things here, three red flags, I'm going to go ahead and just sell half the position. If you read Market Wizards, I can't remember who in Market Wizards says, when you're really torn on a position, it's never a bad idea to sell half. If you're really torn, if there's some positive, if there's some negative, go ahead and sell half, because regardless of what happens, you should be happy, because if you sell half and it keeps going up, you'll still have half. If you sell half and it goes down, then you're kind of happy that you sold half, right? So this is one of these where I look at and I just I hem and haw and hem and haw. So that's the plan for Etsy, but only if we close back under 68.40. If we close under 68.40, I'm going to go ahead and take half my position. So I hope that makes sense. Hey Johnny, how you doing? KO bought some groceries. I have yet to decide an exact rule for these large moves, so I just sell. Oh, did you buy Coca-Cola, Johnny, before earnings? I hope you say yes. It's kind of naughty that you bought it before earnings, but if you did, good for you. I'm good, because it did go up really strong today. Hey Mount Doji, how you doing, buddy? Nice to see you. All right, so that's Etsy. So let's get on to IWM. All right, so IWM is a trend trade. It's a crossover trade that I took back on the 28th of June. I took it because the 10 crossed over the 50. This is a good back-tested approach to a long-term back-tested approach to trend trading IWM. Now, when I bought it, I did buy it here at 155.88 because of the crossover, and this is mechanical. Next day, it jumped way up. I sold about 25% of the position, which was nice to sell it that quickly and take some chips off the table. Since then, it's just been moving sideways. I did take off a couple. I think I took one profit target here. I took one profit target here. I took one profit target here and here and here, but it is underwater on the trade. But again, this is a trend following trade, so I can't be as precise. Red flags, all that kind of stuff. This is just a mechanical trade, because sometimes you'll get a huge move out of these moving average crossover systems, because when you're discretionarily trading, a lot of times the price action will get you out of a trade, then it will go back up and you won't be able to get back in. So anyway, I did buy half the position back here because it was so far out of the channel. We had two big strong days up, so I did buy half. Now today, because we are still under the crossover, the 10 is still over the 50. I was looking. You've seen me take half positions before, and then you've heard me say, okay, if we get back and hold halfway, or we get back into the value zone, I'll add my second half of position. So that is what I'm going to do today. I'm going to, like I said, I bought half here, phased out, but I'm going to buy my second half of the position for two reasons. One, the 1050 cross is still in place, and two, we had this V2. We went down, but you see how we went sideways, and then yesterday we spiked down, we washed out the previous day, and then today it looks like we're going to close above day one's close. Now you might say, Greg, I see a gap, and you're right. If this had gapped, I would not have taken this, but what's going on is we gapped, we came back all the way down earlier intraday, and now we've moved back up. So we did fill this gap, so it's like it never happened. So I am going to be adding my second half of position on IWM mechanical trade here today, as long as today stays above day one's close. And here's day one, day two, day three, day two washes out day one, day three. Certainly looks like it's going to close above. And I actually did hit one profit target here today also on that first half, but I will be buying again a half. This is a mechanical trade. This gives me a little bit more position size on this, but I waited patiently until it got down into a level where I wanted to add that second half. So hope that makes sense. Oh, Johnny bought Coke 2 days ago at 51.55. Oh man, I love to hear that. Woo, daddy. Wow, beautiful trade. Beautiful trade. Now, of course, if it would have gapped down on earnings, that wouldn't have been so hot. So, keep that in mind. But I'm glad that this did work out for you. One thing I do want to mention, though, if you do buy in front of earnings, obviously, I hope the stock goes up for you. But the issue is if it does gap up strongly, like it did here today on Coca-Cola, I don't want you to have those pathways in your brain get established that, oh, hey, every time I buy in front of earnings, it goes up, because, that is not the case, everybody. And, if you're lucky enough to buy in front of earnings and they just go racing your way, you kind of get that into your head, like, oh, maybe this happens all the time. But, it does not happen all the time. We've seen this time and time again. So, please consider that. But Johnny, that's awesome. That's really great. If I was in this trade, what would I do? I don't see any issue with just getting out. That's a big monster trade. I mean, if it might go up more, but it seems to me maybe a little greedy. But who knows? Let me know what you do, Johnny. All right, SPY. All right. So I did buy SPY yesterday here at 22.97.90 and sold it right at the open at 299.15. So this was a really nice overnight trade. In case we have some new people today, you might ask, Greg, why did you do that? I didn't see anything spectacular as far as technicals go. And you are right. But the reason I do that is because of this back test. This is from Liz Ann Saunders at Bespoke Invest on Twitter. But if you did the opposite of we did, if you bought the SPY every morning in the morning, and then you sold it each day at the close, so you buy in the morning, buy at the open, sell at the close, from 1993, you would actually return a negative 13.9%. But if you did the opposite, which we do every day, and I buying the SPY at the close and then selling it first thing in the morning, so buy in the afternoon, sell in the morning, you would have actually returned 634.2% on your money since 1993. So that means that all the performance in the SPY since 1993, which is a huge idea to get your head around, but since 1993, all the gains in the market have come from after hours. So that is why I do buy the SPY each day at the end of the day, and I sell it first thing in the morning. I've been doing this since February 26th. It has been extremely profitable, although do keep in mind, you can see from the chart, here's the blue line is the buy in the afternoon, sell in the morning. Long term, this has really performed well, but it does have drawdowns. Sometimes it has year drawdowns. So please keep that in mind. Position size correctly. Use a small amount of your account if you're going to do this. And who knows? From here on out, it may never work again. We don't know. But we look at the long-term back test and it has performed well. So that is why I buy it each day at the close and sell it first thing in the morning. But this was a nice trade. It's higher now than it was when we sold it. When I got up this morning, it was down here and I was like, oh, that was great. But we had a big reversal in the middle of the day. So, this is a trade I take every day. I like to vary up my trades, trend trading, discretionary trading, selling puts, and also I like to do my SPY trade every day. So we will be buying SPY at the end of the day again. All right, my poor VIX trade. Not so hot tamale. I did buy VIX back here on the 17th of July, and the reason I bought it is we had this down move. We were under the 30 RSI. We went from under the 30 RSI on the day I bought it. It went over. It went under the third ATR channel, closed above the third ATR channel. So that is why I bought it. Did hit one profit target right the next day. It's kind of moved sideways since then, and then today it fell off a cliff. I only did take a small position size. I took a quarter of a position size because this does have outsized moves. So I am very grateful that I only took a quarter, but I am going to keep it here. You can see we do have a low. We rallied. Now we have a equal low. We have no red bars painting. So this is starting to set up here, guys, as a double bottom with a bullish divergence. And we are at 3101 RSI. So I will keep this just as long as it stays above the 30 RSI. That was my plan, and I'm going to stick to it. All right, XLE. So I did buy XLE back here on the 19th of July. And why did I buy it? Well, we went above the channel. Here's the green lines, the 1 ATR and the -1. We went above the channel. We came all the way back down. We tested the day before I bought it. We tested the 50, rejected the 50, closed above, which is good. And then the day that I bought it, it triggered this V2. Here's day 1, day 2, day 3. Day 2 clearly washes out day 1. Day 3 closes above day 1's close. Now, this is not an optimal V2, but on the other side of the coin, we did reject the 50, and when we did trigger the V2, we closed back into the channel, which I prefer to take the majority of my trades in the channel, especially on pullbacks. Then we also had this it did actually trigger a V1, and then the next day went below here. So that was very negative, but when you have something negative that then turns around and becomes positive, that swing, in my mind, I like to take the opposite of that. So you can see it has moved up nicely since we've bought it. We did hit one profit target yesterday. We got very close to hitting one profit target today. Missed it by a few pennies, unfortunately. Currently, we're at 53.07 RSI. So my stop on this trade now will be if we have a close below 50, because when you're under 50, getting back up to that 50 RSI, a lot of times that's going to act as resistance. If you can get above that, that's good, because then you have the 50 RSI support below you. So right now we're still above 50 RSI. I am definitely going to hold this until we close back below the 50 RSI, or if we continue to move up, for example, if we rejected that 200, that would also be a place for me to take profits on this trade. Steve, hey bud, Steve Burns is here. Good to see you, Steve. Thank you for coming by. I always appreciate it. Steve says tech earnings fireworks are going to start tomorrow. Facebook, then Thursday Amazon, Google, and Friday Twitter. Yeah. Yep, this is going to be a big week for earnings. It's always kind of scary. I'm being a little conservative this week because of that. You never really know what's going to happen with earnings, so I'm going to play it a little closer to the vest and be a little bit more conservative. Thanks for saying hi, Steve. Appreciate it. Johnny says, I would have bought it at that price for a position trade. Okay. All right, and then lastly, this is a put that I sold. When I sell puts, I like to identify a price. I like to identify a strike price that has support on 3 time frames. I did sell the I did sell the Johnson & Johnson August 2nd 122 put. So if the price stays above $122 before August 2nd, I will be able to keep the full premium that I sold. On the monthly, the $122 price is still in the value zone. It has the 1 ATR channel below it, so there should be some support there. There should be some type of buying there. On the weekly, that $122 price lines up right with the 3rd ATR channel, so there should be some support there. And then on the daily, that $122 mark lines up all the way back to that previous low we had back in December. So there was some support down there even in those horrible days of December. So that is why I sold it. It is profitable so far, so we'll just see what happens. All right. Oops. All right. So listen, let's talk about a little bit about the revenge trade. This is from Stephen Goldstein at AlphaMind 101. It's a really great Twitter channel. So if you get a chance, go there, subscribe to it. He has really good daily posts on trader psychology. And you know, I'm such a huge fan of trading psychology. I just don't think you can get enough. So go there and read his post. It will definitely help you. But trading crime, number 19, the revenge trade. So if some of you are new and don't know what a revenge trade is basically when you think you need revenge on a particular stock. It went against you, you lost a lot of money, and for some reason your mind focuses in on, I have to make that money back, and specifically, I have to make it back on the stock that I lost. Right? If you've never heard this before, it sounds crazy, right? But it's a real thing, right? So Steven says, who exactly are you taking revenge on? This is the ultimate crime where you are truly both perpetrator and victim. You are punching yourself in the face, and it's true. Guys, you will know, your nervous system will tell you when you are starting to obsess about a stock and that you lost money on that stock and it has to go up. Please don't do it. Just take it off your watch list. Go to another stock. Just forget about it. It doesn't matter which stock you make your money back on. It doesn't have to be that particular stock. And, you know, another thing that I've seen is if people miss a trade, like let's say that Coca-Cola trade. Let's say, oh, I really wanted to buy Coke and I didn't, and now it's up. Dang it, I'm mad I didn't get it. Well, I'm going to short it. I'll make the money on the downside. I'm telling you, it never works. You know, listen to your body, listen to your nervous system. If you have the smallest little inkling that you need some kind of revenge on a stock, just take it off your watch list and move on to something else. And even better, if you feel that way, please email me and tell me that you're taking revenge on this stock because it has to go down, and I will secretly buy it because I promise you the odds are against you in doing that. So I don't know if any of you out there experience this, but it's a real thing. But the revenge trade. Who exactly are you taking revenge on? You're not taking it on the stock. The stock could care less, has no idea that you even exist. This is in your head. This is the ultimate crime where you are truly both perpetrator and victim. Yeah, I mean, you're taking the revenge on yourself. You are punching yourself in the face. So please don't do this. Stephen Goldstein at AlphaMind 101. It's a great channel. Alrighty. All right. Well, let's head down through and see if there's anything interesting for us today. All right. Well, Apple's having a nice day. It's broken out of this range. Well, it did yesterday. It's up $1.40. It's a nice, it's a nice move today. It did recover off of its lows. Has earnings next week. It's a 64 RSI. It's just too high for me to buy today. ProShares. I'm sorry, AGQ. So it's extremely high right here. It's too high for me to do anything with. I want to buy it when I have a better risk to reward ratio or a better entry trigger. We were lucky enough to buy AGQ back here on the 10th of July when we had the 5 EMA crossover the 20 EMA. That's a good long-term, profitable, back-tested approach to trading silver. It does not have a high win percentage, but when you do catch a big trade, you can really make a lot of money. More often you're going to have losing trades, but they're going to be small, small, small. And that's the key with trading, everybody, is to keep your losses small, and eventually you're going to have a nice big trade, and it's going to pay for all those little losses and more. And so you can see we did buy it here back on July 10th, had this big monster move. I phase out of my trades each day, and so I phased out a little here, a little here, a little here, a little here, and I ran out of shares up here. But this was, I think, a 14% move, one of the best trades of the year, and it was just as simple as taking that 520 EMA cross. You know, I mean, we were 1 or 2 days away from the 5 crossing under for a small loss, but that's okay, right? And, you know, the key here is you need to hang on to these losses. Don't get itchy trigger fingers and just want to hurry and take it, because there was no reason. There were no red flags here, right? But this was a mechanical trade anyway, so red flags didn't even enter the equation for me. If it was a discretionary trade, I may have taken some here because we rejected the third and closed back below. But anyway, 520 cross, this was a beautiful trade we had. You know, going forward, what would be interesting? Well, have to have a substantial pullback for me to get interested in trading silver again. Advanced micro, you know, we came up here, we went above the third HER channel, then we closed back below. We started coming into value. We're up a little bit today, but there's really nothing here that would interest me today on advanced micro devices. Amazon, same move, up above the third HER channel, did come back into the value zone. You know, there's an old saying, buy the dips and sell the rips. You know, buy the dips in an uptrend and sell the rallies in a downtrend. Well, this is an uptrend, but I'd like to see it come down into here a little bit more. It's just a little too high for me to buy. I generally don't buy V1s, V2s on a dip when they're above the 1 ATR channel, because the easiest moves that you're going to get in a stock are like take the center point of the value zone up to the third ATR channel, the center point down to the negative third ATR channel. Now we've already kind of started to pull that rubber band a little bit tight. It's already had that kind of move, so the risk to reward doesn't make sense. Ideally, what I'd like to do is I'd like to see the price come down, wash out this previous low here, get people that have stops in here, wash that out, but still be strong enough to move back up. So nothing on Amazon today. Boeing's been kind of a wild one. It's really nothing today. We tagged that third ATR channel. We reversed. We created a V1 to the downside. We have earnings tomorrow, so I don't want to get involved in this. This is an example of a previous trade. I took this when we had this nice strong close above the 200. I took a half position because we came from a lower low. Next day it stopped me out, and then I just never got involved with it again after that. This has been kind of a wild one. So nothing on Boeing today. Alibaba's having a big strong day today. Triggered this fractal here. But there's really nothing I can do with Alibaba today. The risk to reward doesn't make sense to me. My theoretical risk is going to be here at the, or reward is going to be here at the third ATR channel. And, you know, if I were to put a stop on this, probably under the 100 day. So the risk to reward doesn't make sense. It is strong here though. MACD is positive. RSI 63.92. Just that fact alone is a little bit too high for me to buy. So nothing on Alibaba today. Caterpillar. Well, we came back down into the value zone. We rallied, which was nice. Back into the value zone. We rallied again. We did have a V2 here. This bar was too large. The day one of your V2 or your V3, generally, if it's larger than 1 ATR, I don't want to get involved with it, because if it's larger than 1 ATR, it means that there was a lot of selling to make it move that far. But this V1 would have worked out, at least so far, but nothing on Caterpillar today. Dow Jones, this is the double leveraged diamonds. Went above the third ATR, came back into value. There was really no entry. This technically was a V1 here, but the prior bar was larger than 1 ATR, so it's something I don't want to get involved in. Just the risk to reward just don't make sense to me. You know, let's wait till it comes back down into the value zone, or we get some other kind of signal. This was a trade we took back here on June 6th. This was a good risk to reward because we closed over the 200 day, which is positive. If we closed back under the 200, I would have gone ahead and just gotten out for a small loss. But if it went my way, then I needed to be patient with it. This was a mechanical trade, by the way. This was a mechanical trade. So if it closed under the 200, I'd get out. If it moved my way, I would just continue to scale out until I was out of the trade. And I scaled out right about here of the whole trade. So that was a nice trade. Walt Disney. So, we're in the value zone. We made this move up. We're back in the value zone. This is good. This is phase one. We're in the zone. We're in the value zone. Now, phase two is we need a type of setup. We need some movement sidewards. We need some consolidation. Well, we have it. Now it's happening, right? But now we need a V1 or a V2 trigger. Ideally, if it came down another day and another day, then poked its head below the 1 ATR channel, closed back above, triggered the V1, that would be ideal. But nothing there today. Here is exactly the example that I was talking about when I said I'd like it to go under the 1 ATR channel and back over. Same thing. Here we are in the value zone. Here's day one. Day two washes out day one and also goes below the 1 ATR channel. The next day, day three, was our entry trigger. Day one, day two, day three. Day two washes out day one, day three closes above day one, and to put a cherry on top, it rejected the -1 ATR channel, which I like. And you can see this was a great trade for us. This was a discretionary trade. I scaled out right up to about here, but I haven't had any trades in Walt Disney since then. How's our Etsy doing? Well, not too bad. Like I said, if we close under this line here, this is the high of the previous high of this range. If we close under, I'm going to go ahead and just take a half of what I have left off because I'm conflicted on this trade. It's been a nice profitable move here. I don't want to give it all back, but on the other hand, I don't want to ignore some warning signals. And so if it closes above, I'll keep the full position, but if it closes below 68.37, I'll go ahead and lock in half. Facebook, up, down into the value zone. Nothing really there. Five Below has had support at this 100, but there's really nothing here. Although in the next couple days, see, this technically is a V1, but this bar is too big. It's larger than 1 ATR. So this bar is not larger than 1 ATR. I like this bar better. Like tomorrow, if we went down, reversed back up, triggered a V1, and it also triggered the V1 when it went under and over the 200, that would be great. So I'm watching for this on Five Below going forward. Gold, well, we had the big, huge move up. Now we are back into the value zone, which is good. I like this. So, phase one, we're in the zone. Yes, we are in the zone. Phase two, I need some consolidation or sideways movement. Phase three, I need a trigger to get back in. So I'm definitely going to be watching gold. Just to show you, this is a previous example. This is similar to our silver trade. We took the 5 EMA over the 20 EMA. At the same time, we took out this fractal, and it happened in the value zone, which I like because you have the easiest movements, and we scaled out from here all the way up to here. That was a really good trade. Google's been kind of all over the place. We did take a trade here for a quick profit here when it rejected the 200. I got back in here, got stopped out the very next day, and then never got back into Google here over the 200. It's been kind of a messy ride all in all, but it is up today. So if any of you have Google, I'm glad it's up for you. Keep in mind we do have earnings coming, so keep that in mind, please. Goldman Sachs. Monster day on Goldman Sachs. 71.98 RSI. Looks like it's going to close above the third ATR channel and close above the 70 RSI. That's very, very strong. But for my purposes, there's really nothing to buy today. We did buy Goldman Sachs back here, and the reason I point this one out is that I did take this trade even though it was over the channel. It was over the green line, over the channel. But the reason I took it is because the previous day we closed under the 200, then we closed back over, and we also triggered this fractal. This was a nice 3-day trade. Got out right about here. Oh, Give me 1 second. I have to turn something off. I'll be right back. Okay. So biotechnology, we have been moving sidewards here, hugging the 50-day moving average. I'm not going to do anything with IBB today. I'm waiting for, this is a different chart. I'm waiting for the 5 to cross over the 30. So the blue to cross over the gray. That's a good back-tested mechanical approach. I will be taking that when eventually the 5 does cross back over the 30 on IBB. Intel, big, strong move up. But for my purposes, it's just too high here to buy. Russell, we did talk about the Russell. We do have a less than half a position in the Russell based upon the 1050 EMA cross. I do like the pattern here where we come back in, we move sideways, we poke down, and we reverse. So I'm going to be adding my second half position to IWM today at the close of the market because of this V2 formation and because we are still under the 1050 SMA cross. Johnson & Johnson, nothing there. It's a 27 RSI. So if it gets above 30, you know, we might take a look at it, but I have a feeling if we get above 30, it's going to be right up. We'll have the third ATR channel above us. So this one's got some work to do. Coca-Cola. Good job, Johnny. That's beautiful. Beautiful. What a trade. I mean, would I get involved with it here? No, I just can't. It's just too high. Lockheed Martin, well, earnings, it gapped up, reversed way down earlier today. It's come way back. I just don't want to get involved with this today here. There's really no clear signals. Interestingly enough, it's a V1. It washed out the high and reversed under, and it's a V1 to the downside. It's a V1 to the upside. We washed this out and reversed up. So wherever we close, depending on yesterday's close, we'll make this a V1 to the upside or the downside. But this just confuses me, so I have to look for a more clear trade. We had a great trade back here. Here's an example of a nice V1 where we moved up. We moved back into the value zone. We did move sideways. We had a stab down reversal. We did buy right here, and we phased out all the way up to here. So, you know, these trades work. Not all the time, obviously, but you have to be patient and wait for the right trades. And so this one doesn't speak to me at all here. MasterCard does have earnings next week. Been a big move. Here's another nice example of a V1, V2 that we took here. Move up, move down into value. Here's day 1, day 2, washes out day 1, day 3 closes above day 1. We had a nice 2-3 day trade up to here. We got out of about 50% and then it puked on us and got out, but we did still lock in 50% of the profit up here. Just didn't get another V1 or V2 to get us back into this leg, unfortunately. Merck. You know, this is interesting here because we came down, we made a lower low, we rallied up to about the 50 RSI. The people that bought it here, they were targeting this 50 RSI. When it didn't hold, that's probably what moved it back down. But now we have a V1, not a great V1, mind you, because this did not wash out that bar by very much, by at least a quarter of an ATR, but it is a bullish engulfing candle. It's a 48, 41 RSI. I think my move on here, I mean, this I guess would be legitimate to buy here. I just don't like it because it still has battling the 50 RSI. If we broke above this fractal, here's a fractal as a high with 2 lower highs to the left, 2 lower highs to the right. That might be interesting for me if that happens in the days to come, but nothing today. Microsoft, we had that big move up, sell off on earnings. We've rallied. Still haven't been able to take out that high. These big bars concern me when they're in the recent past because you have the range here, the high range there, the low range there. So nothing on Microsoft today. Netflix, keep in mind, this is what can happen on earnings, everybody. We saw Coca-Cola go up, but please remember it can go the opposite way as well. And ever since earnings, it's just being sold into. There's a lot of distribution going on with this stock. I would imagine any rallies would be short-lived. We're at 306. It may find some support at 300. I don't know, but we'll just have to wait and see. Nike. So, Nike, I like this in the fact that we move up. We're down in the value zone. Technically, this is a V1. We have this bar down here. We wash it out. Technically right here, right now, that is a V1. We did gap up. I don't like that as much. We filled a little bit of the gap, but not all the gap. This bar here is a little bit larger than 1 ATR. So, this one to me is just kind of a coin flip at this point. I don't like that this bar battled with halfway of this bar and then it failed. So I'm just gonna let this one go. But, if I did take Nike today based upon this kind of subpar V1, I would use a close below the halfway of the washout bar or this line right here, 86.25. But I'm not going to do anything with Nike today. I think there's better. Philip Morris had the big move up, move back down. PayPal, this big bar concerns me. We did come in the value zone. We did rally today, but just this big bar concerns me. I'm not going to do anything with it. Plus earnings are tomorrow. This was a nice V2 we had back here on the 28th of June. We moved back into the value zone. In here we have a legitimate V2. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. And we had a beautiful trade on this all the way up to here. The Qs gapped up, all went all the way back down, closed back above. That is a bullish kangaroo tail, but it's just too high. There's really nothing I can do here. I want a better risk to reward like we had back here when we closed under the 200, back over the 200. Any close below the 200, I would get out for a small loss. And then if we were lucky enough for it to go our way, like we did, I would buy it here. And that's exactly where we did buy it. So close under, small loss. And this was a great trade. We phased out all the way up to here, ran out of shares. Boy, one of my trading platforms crashed on me, which is okay because I'm not using that. I'm not using that one today, but dang. Snap, having a big day today for sure. Earnings are after the bell though, so that's not allowed. S&P, we're going to buy that at the end of the day. Square is moving back down. I'd like to see move into the value zone, look for some kind of trigger. This is an example over here. Really nice, beautiful double bottom with the divergence. We make a low, very deep bars. We rally. We make a lower low, very shallow bars, meaning it's running out of momentum. We have a false break to the downside. We have a V2. We close back in the value zone, and we rode this one. We scaled out all the way up right to about here. Bonds, not having a good day today. Tesla, it's having a great run. It's just too high. Twitter, nothing there. Natural gas, nothing there. United Healthcare, I added this one. Here we had this move up. We moved back down into the value zone. Earlier in the day, intraday, we did have a V1, but I don't think I would take it. I just don't like the strong downward movement here. Oil, that's positive, closing back up into the value zone, but nothing there. The dollar had a big move up, nothing there. The VIX, ooh, I may have to get out of this. It looks like it might close below the 30 RSI. All right. I've been battling VIX. It's not a revenge trade, but It almost seems like it's getting close, but no, I'm following the rules. So if this closes under 30, I will be exiting this today. All right. Verizon, boy, that was a big reversal. Got down to about a 33 RSI, reversed back up. It's a V1, but I cannot take a V1 in right in front of this huge bar. Energy Select, of course, we have that. We bought that on the V2, the rejection of the 50 RSI, the close back up into the channel. So it's a 52.92 RSI. As long as it stays above, I'll keep it. XLF is financials having a really good day. It did come back into the value zone. It did have a V1 yesterday. I didn't take it. It was just a little bit too high, and we had a lower high preceding it. I needed it to wash this out, but if any of you had that, congratulations. Real estate, V2, but day one is too big, too much supply coming into the market. All right, utilities, nothing there. So, you know, healthcare is interesting. That's one hell of a V1. Here's day one, day two. We wash out day one. We certainly looks like we're going to confirm the V1 and it closed back up. I don't like this big bar here. I don't like that we failed at the halfway mark, and currently it failed at the 50 RSI. Pharmaceuticals. Well, you know, well, right now it's right on the bubble of confirming a V2. It did bounce off the third ATR channel, but that's about it. If it happened in the 30 RSI, that would be different. So I'm going to pass on that. So a couple more to look at. Berkshire Hathaway looks like it is forming a V2 close above the 200-day. Not too bad there at all. Again, this bar concerns me. This is larger than one ATR. Now, you know, this wouldn't be a bad trade here. It gives you a good risk to reward. If you're wrong very small under the 200. If you're right, you have some movement upwards. But I'm just going to let this one go. But that one's not too bad. I see better. All right, so this is the trade I'm going to take at the end of the day. Here's CVS. So, you know, we had this huge move up. We've been coming down. We're into the value zone. We start to move sidewards. We make this low, then we rally, giving us a lower high. But now we did wash out this low, and we triggered this nice V2 today. RSI is 54.81. So bullish engulfing bar. So I do like this trade. My stop will be probably the 20-day moving average, but I do like this. So bullish engulfing bar went from under 50 over 50, V1 in the value zone. So I will be buying full position of CVS today. Home Depot, earlier in the day it did trigger a V2, but now it's untriggered. Russell, I am buying my second half of my Russell position here today because of the value zone and because of the V2, and we're under the 1050 cross. Oracle, nothing today, but this is a really great example of a move up, a move down, sideways. If we could get a move down and, you know, underneath the 1 ATR channel, back over and a trigger, that would be awesome. So I'm going to be watching this in the future. And pharmaceutical ETF, we talked about that. So as far as I'm concerned today, I have two trades. I'm going to buy a full position of CVS today at the close because of this V1 in the value zone over 50. And there is a dividend tomorrow. And then IWM, because of the V2, I will be adding to my existing position. I was waiting for it to come back for a better price while it was still under the 1050 crossover and still in the value zone. So those are my choices for today. Let's go ahead and take a look at the current positions and see how we're going to manage those. So looks like I will be just taking half of my Etsy position off today because we rejected this previous range. We rejected the second ATR. We were above it. Now we were below it. We had a V1 to the downside. It's still strong momentum move. So I'm going to take off the half. I sold about half. I'm going to take off the half of the half. And that's what I'll keep. We'll be buying the IWM, that second half. SPY will be buying that at the end of the day. VIX, I'm going to have to watch this for a close under the 30. And XLE is still hanging above 50. So that is the plan. And so after the market closes, everybody, if you have any questions at all about what I discussed today, I know I went through a lot today, but please don't be shy. Just type it in the chat and I'll do my best to clarify it as soon as the market closes. So for today, just to make sure I have my orders in to buy CVS, I am going to buy full position size. I'm going to buy 10% position size in CVS. I'm going to buy a half position of IWM, and I'm going to sell half the position, what I have left on Etsy. I guess I'm still going to have to watch that VIX there. So it is a red day today, not too bad, but it's red mainly because of the VIX and Etsy. Yesterday, however, I did hit a yearly high in my account. I wasn't sure. I didn't want to say until I checked the numbers at the very end of the day. But yeah, I did make a new high yesterday, which was great. All right. So again, selling half position on Etsy, buying half position on IWM, buying the SPY at the end of the day for the overnight trade. VIX looks like it's going to hold above the 30, and XLE almost hit a profit target, didn't quite. And yeah, that's it. So, I know there's a lot of stocks. There's a lot of stock entries that you could talk yourself into. I prefer just to narrow it down to the very best of the very best. And today, honestly, CVS is the best setup that I can see today because of the bullish engulfing bar, the V1, the close, we were under the 200, under the 20, under the 5, under the 10. Now we're back above. Now to the downside, we're getting a little close to that 1 ATR channel, but it's still within the parameters, which would let me take the trade here. All right, so I've got everything programmed in. Oh. So Mount Doji, do you still have Ameritrade? Boy, that gap down, but I'm glad that stayed back above. On the positive, we were under the 200. We rallied big. Now we have the 200 underneath us, which is great. We did reject the 250, 59 RSI. So let me know if you still have that.
Order filled.
All right. That was it. So we got filled on SPY at 300.03. So that is our new entry on SPY. And then we have our new entry on IWM. right here at the close. I'll have to see what the average price of that is later. And then we sold half of Etsy because, again, we rejected the second ATR channel. We came back into the range. We had a V1 to the downside. So we still have a little bit, but not the whole thing. All right. Let's see. All right, so how did everybody else do today? Oh, I do have some quick charts to go over. Frederick sent me a few charts that he's been working on, and I just wanted to quickly go over those for him. So he bought this on the 19th. He bought it right here. It has moved up. He's phased out of 2/3 of his position, which is good. So that's looking good. This is a bit of a bearish bar here, though. Mount Doji still does have Ameritrade. Good. Good. Well, it closed above the 200, so that's good. So this has been a good trade. I'm glad to see Frederick, that you've been phasing out as this has been moving up. I don't like the action of this bar today, but you are out of 2/3 of your position, which is good. Here's another trade you took back here on the 18th on this
partially filled
on this V1. So this has moved nicely in your direction. It looks like it closed under the 50 RSI. So just my personal opinion, it rejected the 50 RSI and it rejected that 10-day, I believe. So I would probably go ahead and take profits on that if I were trading that. Here you bought on the 19th, you bought this V1. This has moved up really nicely. You phased out of 1/3. I'm glad to hear that. It's holding above the 50 RSI. So this is great. Yeah, I would probably keep this now until it closed below the 50 RSI, or if it keeps moving up, continue to phase out. And if we get a close under the previous day's low, I'd probably get out of that. And then this one here doesn't have any notes on it. I don't know if you bought it yesterday or if you bought it today, but this does look pretty strong, over 50 RSI. MACD just went positive, took out this fractal back here. That looks good. But Frederick, you're really getting good at spotting these trades, and proud of you. Keep up the good work. Mount Doji says, is there a good video to learn the raindrop chart, Steve? I don't know. Maybe Steve will let you know. Chris said, I had Etsy phased out over the last few days and closed the remaining on the open today, just short of the high of the day. Oh, good for you. There's a lot of different ways to do it, right? There's a lot of different ways to do it, but the key is be really stingy and get out quickly when you're wrong, and you can be creative to the upside when you're right, but just the one thing not to be creative about is keeping losses and letting them grow. Hey Frank, how you doing? Good to see you, sir. Says, hi Greg, would love your thoughts on a rising dollar and TLT. Well, let's take a look. So TLT, first of all, I think I said a few days ago, this looks a little shorty to me because we had this big move down. We had this rally back to about halfway of this move, and we've just come down. I mean, a lot of times the dollar and bonds go inverse of each other, so that's why you're seeing the bonds sell off today, and you're seeing the rally in the dollar. We looked at the dollar earlier. I mean, the dollar is very strong here, very strong. It's over the 3rd ATR channel. It's 61 RSI, but I really don't see any setups here on either of them. but they're an interesting phenomenon to watch the interplay between the dollar and the bonds. But suffice it to say, bonds look a bit bearish right here. Maybe if we come back and test the 50-day, that might be a decent entry point. That's where my eye is drawn. And then on the dollar, too high to buy, wouldn't want to short it. So I don't know if that's what you were looking for, Frank, but I really don't see anything there. Mount Doji says, could you show Crone whenever you get a chance? Yeah. Oh, that looks good. Mount Doji, why didn't you tell me about this before? I like this a lot. I like this a lot. I mean, we have a lot of things going on here. We come from a lower low. We rallied. A lot of times these lower lows fails like this did because the people that bought here, when it started to weaken here, they're probably going to take their profits from here. This is going to move it back down. But today, I mean, look what we have. We have a completely beautiful, legitimate V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. And to put a cherry on the top, it happened at the 200-day moving average. And it looks like MACD just went positive. This is a great setup. And it closes above 50 RSI. Mount Doji, you've got to show me these earlier in the day. I think I would have bought that one. That does look really good. That looks really, really good. Good call. Steve says, I have 2 articles on my website, New Trader U, Raindrop Candlesticks User Guide, how blue raindrops can identify support resistance levels. Oh, that's great. And just, let's see. And this is Steve's website here, newtraderu.com. It's a really great website. He has some e-courses. He has a weekly video newsletter where he analyzes the market. He has just really great articles all the time. I mean, spend a weekend and read every single article. It's definitely going to make you a better trader. So, I mean, anything that Steve puts out is just the best. So visit his site here, newtraderu.com. And if you haven't subscribed to him on Twitter, at @SJosephBurns on Twitter. Mount Doji, I thought Crone was too big of a candle. Yeah, I could see that. I mean, I could see taking a half a position on this one as well. I'll tell you what though, I will be watching this. I'm going to put it down on my list here because in case it does come down, maybe to halfway of this bar here, giving me a little better entry point, that would be good. But this looks, I mean, this is good. I mean, it's a beautiful V2. The V2 happened over the 200 and you have a higher low. So you have a higher low V2 break above the 200 over the 50 RSI and MACD's positive. I mean, I don't know what more you could ask from a trade than that. Murit's here. Hey buddy. Good to see you. So I'll be watching that tomorrow, Mount Doji. I hope that moves up for you. All right. All right. So a little red day today on my end because of the VIX and Etsy. But so far it's been a good trading month. We'll see what happens tomorrow. Oh, and I did add, let's see. So CVS. All right. So I did add CVS at 56.27. All right. All right. Does anybody have any other questions for me today? If not, I'm going to head up in the mountains, go for a big hike, think about my trading day, think about what I did right, what I did wrong. And I do want to say, even if you have a down day, try to be positive with yourself and congratulate and reinforce the things that you did correctly. People always get down on themselves for the mistakes they made, but that's fine, not getting down on yourself, but acknowledging the mistakes you make and trying to make them better. But do pat yourself on the back when you do something right. And mainly what I mean is basically when you take the loss that you're supposed to take. If a trade didn't go your way, hit your stop, you got out, congratulate yourself on that. Reinforce that behavior. Thanks, Mount Doji. Thanks, Johnny. All right, so Johnny, thank you. Mount Doji, Murray, Steve Burns, thanks, my friend. It's nice seeing you. Chris F., congratulations on that Etsy trade. Johnny and Andy. And listen, if you guys have any other questions that you weren't able to ask today, if you forgot the question or you think about something later, feel free, send me an email or send me, which is in the description of my video. And then also, you can Twitter. Oh, and by the way, I should say real quick, just a little plug for me. I do offer private one-on-one training and teaching and mentoring lessons in the evening time via Skype. So, if you'd like to schedule an appointment with me on Skype, my hourly rates and my emails in the description. But, I put a lot of energy into my students, try to answer all their questions. I do a lot of questions and answers with them after I teach them, because I really want to make sure that I know that you know what we're doing and that you understand the concepts correctly. So I've had some really good experience, or really good results with my clients. I've turned some really losing traders into winning traders, and I'm really proud of that. And if you are interested in a lesson, please let me know. It generally just starts with a free phone call, and we just talk about your experience in trading, what challenges you're having, when you're available during the day, financial situation, all that kind of stuff. And then I'll put together a customized approach in my lesson based upon all those criteria. And then if you like this video, if you like this channel, please subscribe. And if you could, do me a favor, hit that thumbs up button. It really does help with Google, promote the channel, get this out to more people. And I think the more people that watch this and internalize what I'm teaching, it will help their trading. So oh, did I just lose my screen? I think I just lost my screen. Oh, all right. Well, I guess we better call it then. I guess we better call it then. All right, everybody. Have a great day, and we'll talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.